Good morning, everyone. Getting to our top story of the day, the February jobs report. Non-farm payrolls coming in hotter than expected. 275,000 jobs added versus the 200,000 that were anticipated. Yahoo Finance's Josh Schafer joins us at the desk with more. Hey, Josh.
Yeah, Brad, seems like the big takeaway here is really to sort of look past that headline beat that you saw on the non-farm number and sort of hone in on some of the other numbers you're seeing here, specifically the revisions we saw to last month. Remember, we initially had 353,000 jobs added in January. That got revised down by more than 100,000 gains. So when you zoom out and look at the broader picture, the labor market not really running as hot as some people thought. I thought Andrew Hunter over at Capital Economics explained sort of the report well in sum, saying there's less reason now to be concerned about renewed labor market strength that will drive inflation higher. You have wage growth coming in a little bit lower than had been expected on a month-to-month basis. Again, you take a look at that non-farm number. And then, guys, the unemployment rate at 3.9% is the highest level we've seen in the last 2 years. That is now back up to a level that is something we haven't been seeing on a consistent basis. First time it's come up in 4 months. So I think overall, if there was any concern that the labor market was getting too hot again, it seems like this report at least settles that for now.
Josh, do you think that the market obviously taking this, at least initially, as good news here, given the mixed spring, given the fact that once you dig into this report, some of those very key figures were softer than what the street had maybe been anticipating? Is this report then exactly what the market wants to see at this point?
It seems like if you want a Fed rate cut in May or June, this is your report, right? That was what Neil Dutta over at Renaissance Macro said. He called it one for the doves. And in that sense, essentially saying that if you want a cut to come in May or June, remember, part of that base case is at least some level of softening in the economy, right? We can't sit at a 3.7% unemployment rate, have people keep making more money and people keep getting more jobs and not be worried about inflation. So I think if you zoom out, the soft landing narrative always had a little bit of weakness coming in the labor market, right? So seeing a little bit of weakness doesn't mean we should panic, but it is sort of helpful if you're looking for a Fed rate cut to come sooner rather than later.